All right, folks, this is the last step in the accounting cycle. Okay, so we still have financial analysis to do, but there's not a lot of homework in that, and it's relatively easy. Okay, on the first working day after the end of the fiscal period, so we've done everything, we've done adjustments, we've done closing entries. On the first working day of the next fiscal period, okay, reversing entries have to be made for all accrued revenue and accrued expense adjustments. So all we're going to do is reverse those entries. And the reason why is if we don't do that, okay, we're going to double record expenses and revenue. And I'm going to create a second video to explain why in a little bit more detail. Now, let's assume that a 6-month loan was purchased on October 1st, 2008, and it's going to become due on March 31st, 2009. So October, November, December, January, February, March. Okay, so assume that $225 worth of interest was incurred at the end of 2008. Okay, so that represents interest owed. So we're going to have to make accrued interest adjustment. So interest expense debited and interest payable credited. Okay, so that we would have to make that entry at the end of 2008. Now, let's assume that we move into 2009, our new fiscal period, and we pay the entire amount of the interest. Okay, so 6 months worth. Okay, we're gonna pay $450. So our cash is gonna go down $450, and we're gonna debit interest expense. Okay, so on March 31st, okay, interest expense would be debited and cash would be credited because we're paying the interest on the loan or whatever it is. Yeah, the loan. Okay. Now, if we look over that 2-year period, 2008 and 2009, we've debited interest expense for a grand total of $675. Well, that's wrong, because the interest expense over 2 years should only equal $450, right? So we have a problem, okay? And to alleviate that problem, we're going to have to make reversing entries, and reversing entries will do that, okay? All right, so to avoid this double recording of interest expense, okay, we have to make reversing entries. So on the first working day following the end of the fiscal period that just ended, okay, 2008, we have to make a reversing entry. And it's simple. All you do is reverse the adjustment that you made in 2008. So we're going to debit interest payable and we're going to credit interest expense for $225. All right. Then, as a result, interest expense and interest payable now have been debited and credited for the correct amounts over 2 periods. And I'm going to explain how in the second video.